How to start building wealth. The 10% rule for financial freedom. Hey folks! What if I told you that paying yourself first, a simple rule, could help you start building real wealth? Sounds easy, right?
You're probably thinking, that sounds too good to be true. But paying yourself 10% of your income and then investing it is one of the most powerful financial moves you can make.
Before we dive in, hit that subscribe, like, and share button to spread the word about building wealth. Let's break it down. The key to building wealth starts with a simple rule that many millionaires swear by. Pay yourself first. This principle is not just a financial strategy, it's a mindset shift. When you prioritize your future self, you are essentially committing to a disciplined approach to money management. This means that before you even think about paying your bills, buying groceries, or splurging on that new gadget, you set aside a portion of your income for savings and investments. This habit, when consistently practiced, can lead to significant financial growth over time. This idea is at the core of The Richest Man in Babylon, a book by George S. Clason. Written in the 1920s, this timeless classic offers financial advice through a collection of parables set in ancient Babylon. The book emphasizes the importance of saving a portion of your income and investing it wisely. It teaches that wealth is not just about how much you earn, but how much you keep and grow. The principles laid out in this book have guided countless individuals towards financial independence and prosperity.
It's pretty simple. Every time you get paid, set aside 10% of your earnings. This 10% is your ticket to financial freedom. By consistently saving a portion of your income, you create a safety net for yourself. This money can be used for emergencies, investments, or even retirement. The key is to make this a non-negotiable part of your financial routine. Think of it as paying a bill to yourself, a bill that secures your future, before paying any bills or spending on anything else. This 10% is for you, your future wealth, not your present expenses. By prioritizing your savings, you ensure that you are building a financial cushion that can support you in times of need and help you achieve your long-term goals. Over time, this habit can lead to the accumulation of substantial wealth, giving you the financial freedom to live life on your own terms. Remember, the journey to financial success begins with the simple act of paying yourself first.
This is money for you, not for your landlord, not for your credit card bills. This is to create a wealth-building habit.
The reason this rule works is because of something called compound interest. Compound interest is a powerful financial concept that can significantly boost your savings and investments over time. Unlike simple interest, which is calculated only on the principal amount, compound interest is calculated on the principal amount and also on the accumulated interest of previous periods. It's the idea that the money you invest grows on itself, meaning the interest you earn also starts to earn interest. This creates a snowball effect where your money can grow exponentially. For example, if you invest $1,000 at an annual interest rate of 5%, you will have $1,050 at the end of the first year. In the second year, you will earn interest not just on the initial $1,000, but also on the $50 interest from the first year. Over time, it builds more money. The longer you keep your money invested, the more pronounced the effects of compound interest become. This is why starting early is so crucial. Even small amounts of money can grow into substantial sums if given enough time to compound.
Think of it like planting a tree. When you plant a small seed, it doesn't look like much at first, but with time, care, and the right conditions, it begins to grow. You plant a small seed, and at first you might not see much happening, but beneath the soil, roots are forming and the seed is starting to sprout. And over time, that seed grows into a big, strong tree. Just like your investments, the growth might be slow at first, but it accelerates as time goes on. The longer you leave it, the bigger it gets. This is the magic of compound interest. The earlier you start, the more time your money has to grow, and the larger your financial tree can become.
If you invest that 10% consistently, year after year, it will compound, and you'll see how that small amount can turn into a significant sum without you even realizing it.
In The Richest Man in Babylon, we get some powerful financial wisdom. One key idea is, gold is plentiful and grows by being invested.
That's right. The book teaches us that gold, or money, grows by being invested in things that make money. Just like planting a tree, the growth happens when you make your money work for you.
So, don't just put your 10% in a savings account, invest it in assets like stocks, which can offer you the potential for significant returns over time. Stocks represent ownership in a company, and as the company grows, so does the value of your investment. By diversifying your portfolio and investing in a mix of different stocks, you can mitigate risks and maximize your chances of earning a good return. Real estate is another excellent option. Investing in property can provide you with rental income and the potential for property value appreciation. Whether it's residential or commercial real estate, owning property can be a stable and lucrative investment. Additionally, real estate investments can offer tax benefits and act as a hedge against inflation. These things work for you, unlike money sitting in a bank, which doesn't grow fast enough to beat inflation. Inflation erodes the purchasing power of your money over time, meaning that the same amount of money will buy you less in the future than it does today. By investing in assets that have the potential to grow, you can protect your wealth from the effects of inflation and even increase it.
And remember what Kiyosaki said in Rich Dad, Poor Dad: the rich don't work for money, they make money work for them. This means that instead of trading your time for money, you should focus on building assets that generate income for you. By doing so, you can achieve financial freedom and have more time to do the things you love. So, start investing today and let your money work for you.
Let's talk about how powerful compound interest can be when you consistently invest your 10%.
Imagine this. You start with just $1,000. If you invested in the stock market with an average annual return of 7% in 10 years, that $1,000 will have grown to nearly $2,000.
And that's just the beginning. Keep adding your 10% every month, and you'll see the magic of compound growth really kick in.
The key is to start early and be consistent. The more years you give your money to grow, the more it multiplies exponentially.
Now, some of you might be thinking, I can't afford to save 10% of my income. I barely get by as it is.
Here's the thing, you can't afford not to. If you don't invest and grow your wealth now, you'll be working much harder down the line just to catch up.
The trick is to automate your 10% savings. Have it come out of your paycheck before you even see it. This makes it easy and painless.
So, where do you invest your 10%? Well, there are a few smart options. Stocks, bonds, mutual funds, and real estate are some of the big winners.
But don't just go with what's popular. Do your research or talk to a financial advisor to make sure you're choosing the best investments for your goals.
Now, just a quick disclaimer. This video is for entertainment and educational purposes only. Any investment decision should be made only after consulting with a professional financial advisor who knows your personal situation.
So there you have it. Start paying yourself first, 10% of your income, and invest it wisely for long-term growth.
Remember, the more you invest, the more wealth you'll build over time. Compound interest is your best friend, and the earlier you start, the better.
Let's dive deeper into the concept of compound interest. Imagine you start with $1,000 and invest it at an annual return of 7%. Over 20 years, this amount will grow significantly due to compound interest. The key is to start early and be consistent with your investments. Compound interest works like magic. It's interest on interest, meaning your money grows exponentially over time. For example, after 10 years, your $1,000 could grow to approximately $1,967. But if you leave it for 20 years, it could grow to about $3,870. This is why starting early is crucial. The earlier you begin, the more time your money has to grow, turning small, consistent investments into substantial wealth over time. So don't wait. Start investing today and let compound interest work its magic for you. Now let's talk about different types of investments. Stocks, bonds, mutual funds, and real estate are some of the popular options. Each has its own risk and return profile. It's important to diversify your investments to minimize risk. Diversification means spreading your investments across different asset classes so that you're not overly reliant on a single investment. This strategy helps protect your portfolio from significant losses and can lead to more stable returns over time. Remember, a well-diversified portfolio is key to successful long-term investing. Another important aspect of building wealth is managing your expenses. Create a budget and stick to it. Track your spending and find areas where you can cut back. This will help you save more and invest more. By being mindful of your spending habits, you can free up more money to allocate towards your investments, accelerating your path to financial independence. Remember, every dollar saved is a dollar that can work for you in the future. Finally, let's talk about the importance of financial education. Continuously educate yourself about personal finance and investing. Read books, attend seminars, and follow financial experts. The more you know, the better financial decisions you can make. If you found this helpful, subscribe, like, and share this video to help others on their wealth building journey.